welcome to TheoTrade. This is Don Kaufman. It's November 19th, 2019, and you are watching the TheoTrade evening video. Another day and another massively unchanged marketplace. A couple of tweets throughout the course of the trading session. There's also a couple of concerns on my part. Before we get into a discussion of retail, let me give you a couple of concerns of the overall marketplace. First and foremost, we've been expecting the Chinese-US trade deal. Well, we're past due at this point. For the most part, we'd like to see phase one rolled out. What have we seen thus far? Absolutely nothing. But if you missed it, in just the last day, Jerome Powell, stepped into the White House, had a meeting with none other than the administration, specifically individuals involved inside of the trade war negotiations. Now, that's either, number one, to send a message to the Chinese consortium, get the deal done or else, or it's a message to all of us that effectively, hey, what is Jerome Powell capable of doing if they back away from this Chinese deal altogether? Now, whichever one that you want to pick out of that, they're both a little bit ominous for the marketplace. The other ominous sign in here, and again, this is not getting you all bared up. It's nothing you don't necessarily know, but volatility is slightly bidding up. And when I talk about volatility, forget about one-day volatility futures, all right? Look out into volatility. Yeah, I mean the 29-day volatility futures, and this is something that's just continually missed. These things are up all the way at 15. Now the VIX, forget about it. I know the VIX is down to the 12 region, but again, about 1 month volatility futures are all the way up at the 15 level. But that's not everything in terms of volatility. We have day in and day out buyers, net buyers of volatility. And that's volatility specifically inside of the VIX options. Listen, they're buying volatility. Now, that doesn't say that sell side activity is imminent, people. It just simply denotes the professional world, put your helmet on because they're expecting some turbulence along the way. Now, again, it doesn't necessarily portend that there's going to be some wild volatility. It just means the professional world, they're hedging off their risks. So through and through, we are seeing trading firms buying some back month volatility. And you can see it again in just the last 2 days. They're even buying 3-month fix. All right. So again, be aware. Volatility is on the rise. Not the kind of volatility necessarily that everybody's looking at the VIX. The VIX is nothing more than an equation to the SPX. They're physically buying volatility in the VIX itself. Now, the other aspect that has kind of knocked a leg out of the marketplace, you have to talk about oil. Oil just has not been in play at all in the last 3 weeks of trade, channeling between about 56 and 58. It broke today. And because it broke, it's taking the entire energy sector down with it, knocking a leg out from underneath the marketplace. Now, with all of that going on, okay, I think you can expect some very definitive news out of the China-US trade war probably inside the next 72 hours. I don't think that they can necessarily wait if they're going to do anything until even, Friday or the weekend. You're getting just simply too close to Black Friday, okay, and some of the high season for sales here in the United States. I'll push all of that aside for just a second. Let's talk about retail. And specifically what has gone wrong in retail in the last 24 hours of trade. Now, first, I'm going to start with Home Depot, which is not necessarily thought of as, like, all right, this is retail. This is not exactly Lululemon over here. It's Home Depot. Very disconcerting, guided lower. The disconcerting area, though, isn't so much about them necessarily guiding lower. It's effectively, okay, the percentage move in the underlying. Home Depot has now effectively moved over double what it was expected to do. So this is a period of market that we've seen that's just been incredibly efficient. What I'm trying to get at with this, okay, and the point of understanding some of the moves, right, is that we had about a $7 expected move inside of Home Depot on this earnings number. And here we are with almost a $12, $13 move. So you're almost double expectations of movement, which says this wildly efficient marketplace might be coming apart a little bit at the seams, but it's not just necessarily in Home Depot. Now, Home Depot could have a negative impact specifically on the XHB, and it is having a little bit of a drag on the XHB. Interestingly enough, you're also going to face some of the numbers from none other than Lowe's. Okay, so be aware of that. It could be that just, maybe Home Depot had some bad numbers, but you're going to see more from Lowe's. Okay, and if Lowe's comes out tomorrow morning, which they do, and they miss as well, and then they guide lower, now we're in for a hurting on the XHB. But by the time, of course, you watch this, it might be a little bit late to get into the XHB. So I'm going to give you another opportunity over here. And when I say what's wrong with retail, okay, Kohl's, okay, again, this is a statistically significant move. All right, that is denoted by not just the fact that the stock is down today. Like everybody's like, oh, behold, it's down some 20%. Newsflash, everybody sees that already. Okay, what makes it statistically significant? This is only looking for a $5 move. Right, so the expected move, and it's really important that we actually get that down. That expected move right there, it's about $5. Actual move, it's beyond that. Well beyond that. It never even got close to a $5 move. So for the most part, what it's saying, okay, and what you have to read through is the efficiency of the marketplace broke down. And traders, market makers, trading firms, okay, analysts, everybody missed it. Okay, this just completely blindsided. So if there is more to come out on the retail front in the days to come, this could absolutely start to decimate, okay, the retail sectors, which I'm going to show you here momentarily because I think there's actually some trade opportunity. Now, before I go any further, yes, Kohl's horrific. TJ Maxx, however, came out today. Earnings, all right, we're okay. This thing is actually up 2%. But when you start looking at the entire kind of retail perspective out there, you start to look at Macy's. Come on, it hasn't even had its earnings yet. And the stock is down another 10, 11% today. Look at JW Nordstrom's. Okay, stock's down another 6% today. Earnings, they're coming. So we're actually, there's the closing bell. We're going to get some decent opportunities on the retail side of things. Again, on the retail side of things. Now, let me bring up Walmart for just a second. Walmart, okay, listen, we're through earnings. There was a wild reversal in there. But the big one, again, that comes out in the morning over here is none other than Target. Now, if Target comes out again, they miss. Retail, it's going to get hurt. Now, this is predominantly some of the discount retailers following in the footsteps maybe of Kohl's. But what are the opportunities in here, okay, in the very short duration? I think the opportunities in the individual equities are going to kind of pass us by. Effectively, what I'm saying is, like, listen, you can't jump on Target, and the market's now closed, right? By the time you watch this video, hey, it's all over and done with. Target will have their earnings out in the morning. So where might be some advantageous areas? I think you have to go over to ETFs. You have to look at stuff like XLP. You realize XLP, I mean, effectively, here, pull up all-time chart, all-time high. You have the XLP. Now, the XLP, if you're unfamiliar with it, is actually consumer staples. Now, the XLP, it might not necessarily be precisely what you thought it was going to be, okay? So this is the consumer staples, okay? This is the fact sheet. And what I say, it might not necessarily be exactly what you thought it was going to be. Look, some of the holdings, Procter & Gamble, Coca-Cola, Pepsi, Walmart is in there, okay? But if we start to see some misses, right, from Target is very likely to take down Costco. Costco is going to be about 4% of this. So you will likely see some sell-side activity specifically here inside of the XLP as, maybe the future of consumer staples looks a little bit more grim. The other aspect I think it's worth looking at is none other than consumer discretionary. Now, consumer discretionary, this is the XLY. Again, XLY. We'll bring it up on the chart here in just a moment, but I want to show you the components. Amazon, Home Depot. That's why I actually kicked off with Home Depot today. The XLY is already down. But if one of the other components is to fall later this week, none other than something like Lowe's, okay, TJ Maxx did fairly well. But we also have Target in here. If one of these other components goes, this is going to make a huge impact to XLY likely also dragging down Amazon in the near term. Nevertheless, your opportunities, okay, on the short side would be none other than XLY, which did take a hit today. Of course it took a hit because Home Depot took a hit. XLY, nice short opportunity in the very near term if we are to see some negative fallout from Target in the morning, okay, or any of the other retailers, whether it's Lowe's, and we can go on and on. This is a retail kind of a week. How ironic coming into Black Friday, and we're looking at the idea of shorting some of the retailers prior to Black Friday. With that, I want to thank everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.